Greetings everyone, Jay Bernstein here with the Weekly Chimpcast for the week beginning September 21st. This recording is being made at 4:42 p.m. California time on Sunday the 20th of September. So we're going to start out with the big picture on the S&P and the Dow. The charts look basically the same. This is the daily moving average channel chart with divergence on the bottom of the chart in the S&P daily, and you can see that we have had two complete bars above the top of the moving average channel, but failed to get a buy trigger since we would require Williams, the blue line, to be above its moving average of 57, the red line. So the short-term trend remains down. I will remind you that we originally had a setup over here, if you're familiar with the method. If you're not, we've made a recording of it, and a trigger right over here, and these were sell triggers. Let me put it in there correctly. And that trigger occurred on the day that Williams went below its moving average, which was, let me remove that, hang on one moment please, which was on this day right over here. And we've achieved all profit targets since then. Right now the market hit resistance a couple of days ago and coming back down to short-term support. We don't see any signs of a bottom as yet on the short term. For investors, use either the weekly or the daily chart, or the monthly charts. On the weekly chart, well, let me put this the right way. Hang on one second. On the weekly chart, we are trading, one moment please. On the weekly chart, we are trading below support. The best way to participate here is to wait until we hit a buy trigger on the daily charts. So nothing has turned bearish on the weekly intermediate term, even though we'd have two bars below the bottom of the channel. If you're an investor, strongly suggest you go to the monthly chart. The monthly chart is given a great buying opportunity. As you can see, we have come down to the bottom of the channel or lower, and we continue to believe that stocks are a great investment on a longer term basis. Again, if you're not invested, if you have cash on the sidelines, wait until the daily indicators turn bullish on the stocks that you want and buy them at that time. Remember, we're approaching a seasonally strong period which begins at the end of October. We may have a few more weeks of this craziness to go through. Don't be reactive to the insanity. The market is not in bad condition as far as we can tell technically. Market sentiment remains relatively low, which is a good indicator of leading strength. Therefore, we remain bullish for the intermediate to long term, awaiting buy triggers on a short-term basis. This is a great market if you're a short-term trader. If you have any questions, let us know. I'm Jake Bernstein, Jake at trade-futures.com, or Elliot at 2Chimps.net. Thanks for being here, and we'll talk to you next week. You might want to also listen to our reports on the metals and the housing stocks. Thanks again.